The Reserve Bank of Australia cuts 25 basis points, but considered a 50-point cut because of global uncertainty, sending the Aussie dollar down overnight. US stocks fall amid budget negotiations, China cuts key lending rates, and Asian exports continue to surge through April. That's coming up in our 5 Things in 5 Minutes on Wednesday, May the 21st. And then in our deep dive interview, ANZ Head of Australian Economics, Adam Boyton, explains why he expects the Reserve Bank of Australia will next cut rates in August.
Markets have moved toward now expecting a July rate cut, but I think the RBA will still be a little bit cautious. A lot will, of course, depend on how negotiations between the US and its trading partners, in particular China, progress.
But first, in 5 and 5 with ANZ, the S&P 500 and the Nasdaq are down around 0.4% at 4 a.m. Sydney Melbourne time, as traders grow wary of ongoing US budget negotiations and a rise in deficit spending. Meanwhile, in a sign the US services sector is being hit by heightened uncertainty, the Philadelphia Fed's non-manufacturing survey was little changed at negative 41.9 in May. That's the 7th month in a row in negative territory. ANZ Head of G3 Economics, Brian Martin, says it was surprising that sentiment didn't lift, given easing in the trade tensions earlier in May.
It was noticeable that a lot of firms are really quite sensitive to the price climate. 64% of respondents said that they do expect their respective industry costs to rise in the near term or over the next 6 months. And nearly 62% said they expected to raise prices. So from the Fed's perspective, that type of inflation uncertainty just feeds into their guidance at the moment that the best strategy for them to adopt is one of patience and really wait to see how inflation evolves in coming months as a result of current tariffs.
As of 4 a.m. Sydney Melbourne time, the US dollar index was down 0.25%. The yield on the US 10-year Treasury was flat at 4.476%. Despite the drop in the US dollar, the Aussie was trading down 0.6% at 64.20 US cents after those dovish comments from the Reserve Bank of Australia yesterday, and the Kiwi was down 0.15% at 59.20 US cents. Gold up 1.7% at $3,288 US dollars an ounce, and West Texas Intermediate futures were down 0.2% at $61.94 US a barrel. Number 2, the Reserve Bank of Australia yesterday cut the cash rate 25 basis points to 3.85%, as expected. ANZ Head of Australian Economics, Adam Boyton, says the tone in the post-meeting statement was more dovish than the market had been expecting.
I think the global uncertainty did drive a lot of that more dovish sentiment, both in the post-meeting statement, but also in particular in the governor's press conference, where the governor alluded to the board having discussed the possibility of easing by 50 basis points at this meeting. And it appears that the market has latched onto that a bit as underscoring the dovish shift in the RBA's rhetoric.
And we have more from Adam on the RBA's decision and fresh economic forecasts in today's deep dive. Number 3, ahead of the RBA's decision, ANZ Roy Morgan Australian consumer confidence rose again last week by 0.5 points to 88.8. ANZ economist Sophia Angala says the rise was led by household economic confidence in the next 12 months.
If you look at that series on a 4-week moving average basis, that sub-index is now at its highest level since early May of 2022. That's just before the beginning of the RBA's hiking cycle. So that lift in the series we saw in the last week might have been supported by that easing in trade tensions between the US and China last week. But we also had some domestic data last week as well that was released, which pointed to a resilient labour market.
Number 4, the People's Bank of China cut key 1- and 5-year lending rates by 10 basis points yesterday to 3% and 3.5% respectively. ANZ senior China strategist Xiaopeng Xing expects there is more to come, particularly after Chinese banks yesterday cut deposit rates by a larger amount.
LPR was cut only 10 bips, but the deposit rate was cut about 20 to 30 bips. This shows that the Chinese banks are well prepared for the next interest rate cut in the future. We believe that the economic data may weaken in the next couple of months. So there is a chance for the PBOC to cut the interest rate again before the end of July.
Number 5, exports from Asian economies continue to surge in April, with data yesterday showing Malaysian exports in local currency terms beating expectations, up 16.4% from a year ago, while Taiwan was up 19.8%. ANZ Head of Asia Research, Koon Go, says the Malaysian numbers were even more impressive in US dollar terms.
at 28.8% year-on-year. Now, Malaysia is joining other economies in posting double-digit export growth in April. Taiwan, Singapore, and Vietnam also posted double-digit year-on-year growth, and there is clear evidence of front-loading of exports from these economies into the US. Even though the Liberation Day tariffs were imposed in April, companies were trying to get as much products into the US as possible, particularly with the 90-day tariff pause.
Couldn't go there. Now, in today's deep dive interview, ANZ Head of Australian Economics, Adam Boyton, analyses the RBA's more dovish than expected tone in yesterday's monetary policy statement and the admission by the Governor that a 50 basis point cut was considered. He's talking here with my colleague, Alex Tarrant.
For the RBA and for the market, the question from here is, how do the higher frequency data land? So where does consumer confidence and consumer sentiment go? Where does business confidence and business conditions go domestically? And that will give us a bit of a steer on how the domestic economy is running over the next little while versus, I guess, that more dovish tone. And in particular, I guess, a concern from the RBA's perspective that the uncertainty globally will have an impact on the domestic economy. And while I think that's true, the question is how much of an impact.
Yeah, just take us through the RBA's commentary on the domestic economy, because on the one hand, they mentioned some softness, but then they were also talking about strength and underlying demand.
The way I'd characterise it is there are elements of the RBA's communication around the domestic economy where certainly you would get the sense that they see the economy is fairly solid. Where they have made a couple of tweaks to their view, and this is just solely focused on the domestic, is on the household consumption side, which isn't a surprise. They did note that things there are a little softer than they were expecting back in February. No surprise there. Where I guess they've taken the additional step is in looking at the global uncertainty and then overlaying some reasonable downside risk for the domestic economy coming from that. And that seems to be driving, I guess, the more dovish shift in RBA rhetoric. And ultimately, time will tell whether or not the bank needs to deliver additional rate cuts in line with that. Our own view remains that we will see another rate cut in August. I don't think the bank will go in July, although markets have moved toward now expecting a July rate cut, but I think the RBA will still be a little bit cautious. A lot will, of course, depend on how negotiations between the US and its trading partners, in particular China, progress. And also, I think very important, there'll be a lot of focus here domestically on that high-frequency consumer confidence, job ads, business confidence type data to give us a sense of what's the immediate trajectory for the economy looking like.
Was there anything of note in the new RBA forecasts? I saw headline inflation rising up towards the top of the band.
The key changes in the forecast really reflected that weaker global growth environment, the spillovers into the Australian economy. So softer GDP growth, a slightly higher unemployment rate peak, and a slightly lower profile for trimmed mean inflation. The headline inflation forecasts reflect the withdrawal of cost of living relief measures. So the headline inflation forecasts are a little bit noisy, reflecting some of these subsidies dropping out, and they have a mechanical impact on headline inflation in that they push it higher, which is why the Reserve Bank has been telling people to focus on that trimmed mean number where they're expecting inflation of around 2.6%.
Adam Boyton there talking with Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, May the 21st. Catch you tomorrow with further analysis of how global trade was affected by those US tariff announcements in April. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.